Okay, good evening and happy new year. Hopefully you guys can hear me this time around. We're having some technical issues as I don't have my assistant here today, but hopefully we'll get this up and running. And today we are talking about the Bank of England reporting that there will be a cooling down in the housing industry in the UK. So hopefully all is good. I'm getting messages that all is working fine now and we can crack on and looking at some of these articles. As always, I encourage you to put some questions forward. We do intend to have this more of an interactive session whereby people could put the questions across. This is pre-recorded or going to be recorded. You can look back and go through them. But again, Bank of England says that housing is cooling down or will be cooling down as we go into 2025. And again, a good indicator to looking at what's happening at the beginning of 2025 at least is what's happened in 2024 and see how we've wrapped up. Okay, so we are going to be looking at an article by the negotiator, and it is specifically on the reporting of the Bank of England. Okay, great, guys. So we have autumn budget dented home buyer confidence reports of Bank of England. Latest economic report from the Bank of England says that property industry feels Rachel Reeves' tax increase are worrying some house hunters. So the Bank of England, following yesterday's decision to maintain its base, and of course this was a few days ago, maintain its interest rate at 4.75%, has now reported that the residential sales market is softening following Chancellor Rachel Reeves' budget. Now, I always like to look at perspective, guys, and look at context. Now, where were we this time last year? This time last year, at the end of the year of 2023, we had a lot of reports and a lot of predictions that 2024 was going to be a negative year for the housing industry. In fact, if I'm not mistaken, Zoopla had predicted a 2% fall, and there were some other agencies, at least professionals, who indicated that was going to be around about 4%. So anywhere between that 2 to 4%. However, if you have been following my live streams before, you'll know that we're ending the year around about that 2 to 3% growth, depending on which, of course, reports you're looking at, which indicators whether it's Halifax, Nationwide, Savills, but we're looking around about average of 3% price growth. So it just goes to show how sentiment can change very quickly depending on what's happening in the market. So I just want to put that into context as we continue to review this report from the Negotiators magazine. Okay, so what we have, going back. So within its most recent summary of business conditions gleaned from its contacts around the UK, the bank reports cooling sentiment in the housing market. Now, on the one hand, its latest report reveals that while the supply of properties for sale continues to improve, purchasers do not see this as a good time to buy. And I think that's been one of the major challenges, by the way, in the UK, certainly for London, which is that lack of supply, which in my opinion, it's what's helped the UK property to be so resilient as well. Because if there was a flood of properties of supply, I'll tell you, it wouldn't have held up as well as it has been over the course of recent years when we've had so many things come to the UK, whether that be Brexit, COVID, the turmoil in the political arena, but also most recently, of course, a recession and with the interest rates as we saw them increase substantially. So contacts reports budget accentuated this feeling and may have called a housing market that was recovering from a weak first half of 2024, the report says. So affordability is key constraint with the top end of the market, generally slower than the bottom. So again, the top end of the market, generally slower than the bottom. And I know we've seen this at least from prime London, or at least super prime London in recent years. Super prime London did have a peak. I think this was probably around about a year ago or so. Now that market is slightly more sensitive, so I've been told. So the Bank of England report also takes an indirect pop at Scotland's politicians. If you're a landlord in Scotland, I guess this will be something that you're familiar with. But who recently confirmed that they will be making a temporary rent control scheme permanent. Rent inflation continues to moderate, except in Scotland, where regulatory changes are leading to a rally in rents, the report says. Across the UK, the bank's contacts reports rent growth in the mid to single digits relative to a year ago. Okay, so again, anyone has any questions on these reports or what I'm reading out, just make sure you give me a shout. I know I am jumping on today at a different time and a different day, and that's why we're going to probably have less people on or at least live. But I do have some questions that have been put forward to me in the meantime as well. Okay, so we're going to be jumping on to the next article, which is from The Guardian. So we've got UK house price predictions for 2025. With pay rising and rates falling, they will just keep on going up. Of course, this is contradicting the other article that we've seen. However, this does touch upon the Bank of England saying it's cooling down. So nothing seems to stop the relentless march of property values, even with stamp duty increase looming. So it's been a bumpy ride for the housing market in recent years after Liz Truss's disastrous mini budget of September 2022 created a surge in borrowing costs that have cost many households dearly. But despite the elevated mortgage and rent costs, the market this year has turned out to be surprisingly resilient. According to Nationwide Building Society, experts had expected house prices to stay flat or fall, but average prices are expected to have risen by more than 3% in 2024 after falling by 1.4% in 2023. And again, guys, if you were in the market at least in 2023, we didn't end the year very well. Sentiment was down. Whether you were an agent, landlord, a buyer, a seller, the sentiment was really, really down. Mortgage rates were through the roof. A lot of people say, hey, Danny, but they're still very high. Yes, but comparison to what? In comparison to last year, actually, they're low. And one thing we got to start getting used to, certainly, is that we're not going to see those mortgage interest rates that we used to see sort of 4 or 5 years ago. Those times are long gone. Are we ever going to see that type of rates again? I don't know. And yet, if we are, I know we are far from that. So the article we've just seen, of course, is saying about property prices still being resilient. That being said, I promise you, we are way off from any type of property boom. Okay, so not going to happen this year. If there is going to be a property boom, will it be something in 2026? Well, let's continue to review these reports and see how we get on with these. So, looking ahead to the new year, house prices are predicted to grow at a similar or slightly faster rate in 2025, before accelerating to as much as 5.5% in 2026, while record rent increases are likely to return to more normal levels, lenders and estate agents predict. Yeah, so when it comes to rental prices, if you have been familiar with what's happened over the course of the last 3 years, we have certainly seen those double digits across London, at least, and many parts of the UK. We've seen 30% easily over the course of the last 3 to 4 years. Those are not normal numbers. And to be quite honest, if you've jumped onto my lives before, they're not sustainable. They're not sustainable for any stakeholder in the rental market, whether you're a renter, a landlord, a developer, an investor. They're simply not, because this is what really causes the problems, such as what we've seen in Scotland, where we see political interference. And of course, I know that we've seen that across the UK, but we've seen that even stronger in certain regions of the UK. And that's purely because when it becomes unsustainable, then politicians do tend to get into and manipulate the markets and interfere, which doesn't end well, unfortunately, not only for landlords but renters. We've seen this, what's happened in Scotland. God knows why they've decided to do that permanent when they've seen the consequences of rent control. We've seen this in other countries, in Scandinavian countries, and also in Argentina, which recently the new president, my understanding, has reversed that after so many years of rent control that has damaged the market and has created a negative impact to those renters. So rental increase is going to be more sustainable, single digits as we move forward. And of course, there is a divide between the north and the south, both when it comes from a sales price point of view and yet also from a rental point of view. That being said, that the north is going to see a bigger increases on both. There are two markets happening at the moment, and that's what's been happening throughout the whole year. We have also seen, of course, quite a few landlords diversify and start to invest more in properties up north. A lot of people say, hey, Danny, so they're quitting London. Not necessarily. There is a diversification, and that is different to exiting the market completely in the capital. The capital does have its advantages. And of course, the north has its advantages as well, and yet also its disadvantages, as we have seen before in previous videos. Okay, so for the sale market should get a boost as interest rates come down, albeit a slower rate than was previously expected as inflation proves sticky and people's incomes could rise faster than house prices. Now, of course, I'm not an economist, and yet my understanding, at least when it comes to the inflation, is that the budget has something to do with that, with regards to inflation starting to creep up a little bit. So the average price of UK home now nears to £300,000, according to the lender Halifax, stretching affordability for many potential buyers. First-time buyers in particular have struggled to save up for a deposit after record rates of rental growth in recent years. Forecasts from Nationwide, Halifax, Jones Lang's, Savills, Knight Frank, Chesterton's, okay, so range from 2% to 4% in 2025. There is a caveat I have on the rental increase for 2025. I want to share that with you because this is an interesting one. I'm going to go through the sales first, but what I'm going to say is over the course of the next 5 years for the rental industry, at least when it comes to rent increase, I do believe it's going to be single digits and it's going to be slower than what we've seen in the last 3 years. But there is an exception. I believe that 2025 is going to have a bigger increase. And I'm going to share with that. So hang on, be patient. I'm going to share as to why that is. So as we finish this article, house price growth is expected to accelerate. UK average house price growth forecast percentage. So we've got different ones here from Knight Frank and others, including Savills. So you've got this light blue from Knight Frank. It seems Knight Frank are much more conservative at the beginning of the next 5 years. So if you see this light blue, it's lower than most of them. And then suddenly, boom, it goes up in 2029. Why that may be, not sure. But they certainly seem to be much more conservative in the first 3 to 4 years. And yet the other one seems to be more aggressive, especially Savills. Savills seems to be much more aggressive as we start the first three to 4 years and then starts to come down as we get to 2028 and 2029. And then I would say JLL is pretty much in the middle of both, as you can see. So very interesting data here. Activity in the housing market has been underpinned by strong wage growth running at 5.2% in October and slightly lower mortgage rates. The number of mortgages approved for house purchase each month rose above pre-pandemic levels towards the end of the year. Now, one thing about jobs, I don't work in the employment industry. However, we work in very big offices here in central London, and we do have a lot of recruiters here. I remember them panicking over after the budget was announced because their phones just were dead. They were panicking. They were, oh my God, what's going to happen for 2025? And yet, after 2 or 3 weeks, something triggered. I don't know what it was, but something triggered, and they're actually been quite busy as they came towards the end of the year and as they're starting the year as well. So, not sure what's driving that optimism moving forward. I certainly know when it comes to the property market, there is a cautious optimism amongst property professionals, agents, and developers. Again, cautious optimism moving forward. And whether that's the same thing moving forward with regards to employment and business, I don't know. But let's continue looking through this. I'm going to have a look on any questions that we may have here. We've got a few here that have come through, especially when it comes to investors. So, is now a good time to invest in UK property with rates elevated? Well, listen, I know for a fact that, let me have a look here so that you guys can see these questions. There you are. So this was a question put forward to me earlier today. One thing I know, a lot of property investors moved forward at the beginning of this year, and they made the numbers work. And if the numbers worked at the beginning of this year, they're certainly going to work moving forward as we come into 2025. So it really depends on your strategy. Long term, of course, property is long term. If you're looking to buy a property and try to do something with that property, sell it in the next year or 2 years, this is not the market for that type of thing. Certainly, you don't want to be doing that, especially if you're flipping. Again, I think it's quite a dangerous market to be doing that right now, unless, of course, you find something that's super cheap. You know what you're doing, then of course it makes sense if the numbers make sense. But I will say yes, moving into 2025, it does make sense for property investment right now. Depends on the region and depends on the numbers, and of course, taking into consideration that you're looking long term. Another person asked me with regards to selling their property, because of course we do have landlords who are thinking of selling, certainly not all of their portfolio, but some of their properties that no longer make sense. And I would say that there's certainly, if we look at these articles, there's certainly more optimism when it comes to buyers. There is more mortgages being approved. So if you ask me from the context of within the last 12 months, 18 months, is now a good time to sell? Absolutely, I would say so. It would be a good time to sell. And I think that's going to be a good time to sell throughout the whole year as we move forward into 2025. So the Bank of England has cut interest rates twice this year, in August and November, to 4.5%. However, since Rachel Reeves' autumn budget, economists and traders have scaled back their expectations for future rate cuts because the Chancellor's £40 billion of tax rises are forecast to push inflation slightly higher than it would have otherwise been. Again, I'm no economist, but I had figured this out for sure. So that, coupled with sticky services inflation at 5%, limits the central bank's scope to reduce borrowing costs. Financial markets are expecting another 2 to 3 rate cuts in 2025, which would take bank rate from 4.75% to potentially 4%. Again, is that good news, bad news for buyers and sellers? I will say that's good news for both, whether you're a buyer or a seller. Of course, depending on what region you are in the UK, some are more dependent on mortgages than others. But that's also going to facilitate and help buyers get onto the property ladder, or upsize, downsize, whatever it is they're planning to do. So as I feel free to put your questions across. Lower interest rates will help, and income growth outpacing house price growth will also help, but it's going to take time for that process to have much of an effect. Mortgage rates have edged higher in recent months, but an increasing number of lenders have been able to make some reductions to fixed deals. According to David Hollingworth, Associate Director of Broker LSE, the average 2-year fixed mortgage costs 5.46%, while the average 5-year fixed rate at 5.23%. Fixed mortgage deals below 4% that were on offer between late July and September have all but disappeared. Sub 4% deals are important because it's a psychological threshold, said Todd Bill, head of UK residential research. So, listen, guys, one thing I want to say, and this happened at the beginning of the year and middle of the year. You can only know what you know now. You can't just hope and pray for the best and say, I'm going to buy or sell in 6 months' time because mortgages may be cheaper. You don't know what's around the corner. As long as your numbers work, then that's really what you need to make your decision based on where you are now in comparison where you've been sort of the last 6 to 12 months. Again, if we have seen anything over the course of a lot of recent years, is that we don't know what's around the corner, whether that be Conservative with their 2016 manifesto that had so many changes. This is, of course, if you're a landlord, has so many changes for landlords and investors, starting from stamp duty surcharge, from the introduction of Section 24, which, of course, was the removal of you being able to offset your interest rates as a cost. Brexit, we had COVID, we have the disaster of Liz Truss, and the ongoing political turmoil, and of course the inflation that we saw. So again, any questions, just feel free to put them through. Otherwise, we do have other questions here, which is let me have a look here. Yeah. So we did have people wanted to ask with regards to which of the UK regions are going to be doing best when it comes to this year. And of course, no one has a crystal ball, but I do have a few articles I want to share with you. And the best way to predict what's happening in the future, what's going to happen in the future, is certainly looking at what's happening now and in recent months. So let's take a look at this article, which does look at a few regions. And I believe that article was based by... Here you are. This is from Landlord Today. So let me share this with you. It's a very interesting article, which doesn't only review what regions of the UK are going to have better prices, but also which regions have done better over the course of 2024. And this article, by the way, guys, if you're just jumping in, we have reviewed a little bit about what the Bank of England has said over the course of the last sort of week or 2 weeks in terms of a market cool down. But we have also looked at buyers and sellers and what's motivating them right now. So anyone for £84,000 capital appreciation over the next 5 years. So here we have average house prices are set to increase by £84,000 over the next 5 years, according to the latest house price forecast from property advisor Savills. We looked at this, by the way, the last few minutes. If you haven't seen this, you can certainly go back. But we have seen how Savills, including other property professionals, predict what's going to happen in the next 5 years. And there is a slight difference between all. So we have inflation returning to 2% target and the prospect that interest rates will continue to fall. Over the next 2 years, house prices are expected to return to consistent year-on-year growth. So the 5-year mainstream house price forecast launched by Savills today expects, by the way, this was around about 6 weeks ago, expects house price to increase by 4% in 2025, up by 3.5% previously, or 14,500 by 23% by the end of the 5 years, 2029. So this is a quick glimpse as to, it looks at price growth, base rate, average mortgage rate, and so forth. So if we look at this, we can see what they're predicting. So average UK price growth percentage, 2024, 3%, 4% as we go up. So the average of the 5 years, we're looking at 23%. If we look at house prices starting at 358,000 in 2024 and ending at £84,000 growth by the end of the 5 years. Base rate year on year, so they're looking at 4.75% in 2024, or at least in 2025, 3.75%. And they're saying that by 2029, we are looking at 2%. So I know quite a few of you perhaps looking at this and thinking, well, you know what? I would, if the prediction is that the rate's going to come down at 2%, then I'm going to wait a few years. Yes, but then you've got the other side of things whereby in 2 years you have inflation, right? And price also increases. So you can't have one without the other. And it's you really figuring out whether right now is the right time for you to buy or not. So just something to think about, whether you're looking at this from an investment point of view as a landlord and you're looking at those interest rates and you rather wait, or if you're looking at it from a personal point of view for you to go live in a property. You can't have one without the other. Of course, you have the inflation with house price growth, and then you have interest rates coming down. And by the way, as interest continues to go down, that prices generally, typically, also accelerate as the borrowing of money becomes cheaper. So Matt, so here you are. So average mortgage rate will be 2.6%. CPI inflation is going to hold around about 2% over the course of the next 5 years. Nominal income growth 2.9% 2024, and then we're going into sort of 15% over the course of the next 5 years. And real GDP growth, so you're looking at 8% over the course of the 5 years as well. So, source Savills, light at the end of the tunnel. Now, this being said, again, I say this again, light at the end of the tunnel, yes, and yet the UK property has been incredibly resilient over the course of the last 10 years with everything that's been thrown at it. It's been incredibly resilient. So, whilst house prices are now 2.3% below their August 2022 peak on nominal basis, in real terms, adjusting for inflation, they have fallen by 10.5% over this period. So let me just kind of emphasize this a little bit. So what this is saying is that from August 2022, it has come down, prices have come down by an average of around about 2%. Nominal terms. However, when we take into consideration inflation, and this is the part that's important, when you take into consideration inflation, there actually has been a price crash because you're looking at double digits, 10% fall in property prices in real terms when you take into consideration inflation. That's why when you see somewhere, you see a silent price crash. There has been a silent price crash because when you take into consideration that everything in between, everything's gone up, whether it's groceries, petrol, the cost of services, and yet when we look at house prices, it's actually fallen when you take that into account. So let's look at this again. Now that inflation is back on target, Savills has forecast a return to real house price growth of 11% over the next 5 years. This will take inflation-adjusted prices back to where they were before in mini budget. With less external noise, house prices in the medium term will be dictated by fundamentals of demand and supply and affordability. The direction of mortgage rates has been key to buyer decisions over the past 2 years. And decreased monthly mortgage costs are now feeding through into improved confidence amongst prospective buyers, prompting the moderate house price growth we have seen over the past few months. A steady improvement in affordability should allow for house price growth to gain momentum over the next couple of years, but there is still some potential for a bumpy ride. The market will remain sensitive to short-term fluctuations in the cost of debt, and changes to property taxation have the potential to cause some short-term disruptions. Activity to gradually improve, but recovery won't be uniform. Now, we're going to be looking at prices in the UK and where we're going to see the biggest increase. Now, there's going to be no surprise to quite a few of you out there watching this that the biggest increase that we're going to see is going to be in the north. We saw this in 2024, and it's a trend that we're going to continue to see as we go into 2025 with that south to north divide. But certainly, London is becoming much more interesting for many people now, as house prices have kept relatively low, whilst rent prices have increased substantially over the course of the last 3 to 4 years, and it's becoming quite attractive to quite a few investors who had otherwise sort of frowned upon London being a good investment vehicle moving forward. One thing that's interesting in the capital is that the capital has this historic trend that it won't do anything for 5, 8 years and will just remain flat. And then suddenly there will be this boom that would sort of last for a couple of years or so. But when I say boom, it's a proper boom. And then suddenly again, it goes flat. And what's happened over the course of the last few years is taken longer than what it historically does take. As I said, usually from what I've seen and data tells us, it's around about 5 to 7 years. This time around, we've seen this a good 10 years without any real capital growth. Is that going to change within the next 24 months? We'll see. Because one thing to remember is these stats that are being shown by Savills, which we've looked at today, they do show the average, the national average. So when we look at price growth here of £84,000, of course, we're looking at the country as a whole. But if we know anything about the UK or any country that is, property, real estate overall is hyper local. We can have a region doing something and then the other region doing something completely different. And I mean, we saw this with the South-North divide. We saw that the South was dipping a little bit, but the North was increasing ever so slightly. And so when we looked at the UK average, what we ended up having was a very flat price growth. We were looking at 0.5% price growth over the course of the whole of the UK as we came sort of to the third quarter of the year of 2024. Yet if we looked at it from a regional point of view, we did see that divide whereby actually London and the Southeast were dipping sort of 0.5%, 0.8%, whilst the North was actually increasing around about the same amount. And then we have that kind of flat line. So I hope that makes sense. But looking at this, we do see that prices overall are going to increase by £84,000. And if we look at that from a percentage point of view, we're looking at 23% over the course of 5 years. Talking about region variation, here we go into region variation. So regional performance is largely influenced by where we are in the housing market cycle, according to Savills. Now, the UK housing market has been in the second half of the cycle since 2017, where the more affordable regions in the North and Scotland outperformed the UK average, and the capacity for growth in London and the South more limited. I'm going to pause a little bit, guys. I'm going to take a little sip of water. By the way, at some point in the next few weeks, we're going to have some guests come and join. And they are going to be experts throughout the UK, whether it's property professionals, legal, tax, and so forth. So it will be something worth jumping in. And if you haven't subscribed to the channel, please do, because we have a lot of content as we come into 2025. We also provide some great resources. If you go into the description, you'll see the link, and we have some great free resources for you. Whether you are a landlord and you want checklists to have a tenant health checklist, what that is that a lot of landlords have exposing themselves with not following legislation as it is now, and certainly not as we go into a new era for the rental market. So have a look at that. You'll have quite a few resources there. So lower levels of home working and the need to return to commuter hotspots near major employment hubs has driven slightly stronger than expected performance in London over the last 12 months. We expect to see some residual impact of the unwinding of the race for space in 2025, bringing growth to the southwest and east. And that's a trend that's going to continue to happen, because one thing we do know, if you've been following my channel, is that half of the population at the moment does live in urban areas or surrounding the urban areas, whether that be cities or otherwise. Half of the population, the world population, I'm talking about the UK, the world population. So if I'm not mistaken, that's going to be like 4 billion of us. And yet, what we also know is that by 2050, that number is going to double. So if you are looking to invest in property, it is the city where perhaps you're going to be making the most of your investment. Yes, there was a race for space. That time is over. Are there people who still want to live in rural areas and want to get out of cities? Of course there is. But it's no longer the majority. It's not this kind of big trend where, anyone you spoke to sort of 4 years ago, 3 years ago, where you're going through the pandemic, that isn't the case anymore, as these articles are quite rightly pointing out. So I know you are keen to look at the regions that are predicted to increase the most, and we'll get there in the next few minutes. But beyond 2025, affordability will have the biggest influence in every region, despite falling mortgage rates. Okay, so income accumulate bigger deposit to buy, constraining house prices. So sellers expect the more affordable markets in the north, where mortgage buyers are under less strain, to see the strongest acceleration in growth between 6.7%, 6 to 7% in 26, 26, and 2027. By the way, these buyers are not only those buyers who want a home, but these buyers also include and have included buy-to-let investors. And we've seen that over the course of the last few years, to be quite frank. So we've got Northwest, 5% 2025. And that, if we look at from a 5-year perspective, we can see that is almost 30% increase growth, capital growth in the Northwest. Northeast, 28%. Yorkshire and the Humber, 28%. West Midlands starts to come down, 25%, Scotland 25%, and then we've got East Midlands, UK, Southwest, Southeast, London being the lowest at 17%. Again, does that take away sort of the boom that we often see from London? I don't know, but one thing, again, London itself has hyper local areas. When you look at London in general, it's a huge area. What we do know in prime London, sometimes you see different things happen in the north. That's what's happening in the south. And obviously, again, you've got the prime London, you've got greater London. London itself and all of these areas that are sharing also have hyper local areas in themselves. Okay. Not sure if anyone's just joining, but if you are, we have reviewed a number of data and regions that have increased the most in 2024, but also what's expected as we go into 2025. If you have any questions, please feel free to put them through. We did have a few people ask some questions prior to this as I put the title out there. And I want to share this with you because, especially if you're a landlord jumping on, one thing that has been on the mind of a lot of landlords is this one here. How will stricter EPC regulations impact property values and investment costs? Now, if you've been following my channel, my live stream, one of the most popular live streams that we've had in recent weeks has been the EPC explained from the proposals of Labour. Now, if you're familiar, Labour has made some proposals for EPCs, and a lot of landlords, a lot of investors are not happy, and they're quite worried. And this is one of the questions that has come up the most as well, which has been, how will stricter EPC regulations impact property values and investment costs? Well, it's going to impact, from the data that I've reviewed so far, it's going to impact the rent the most, which is why I said to you guys that I believe that the rental is going to increase the most. I believe this year coming, 2025, I say coming, I'm still, my mind is still back in 2024. So this year, I believe there's going to be a strong increase in rent. And I believe as we get into 2029, before 2030, there's also going to be a boom in rent. And let me share with you why. This year, the Renters' Rights Bill will come into effect. And there is a lot of stuff there. Abolishment of Section 21, and you've got tenants, the end of bidding wars when it comes to the rental, tenants having more rights, certainly, being able to challenge rentals increases and so forth. So a lot of landlords are getting their ducks in a row and making sure that their rents are at the market rate. A lot of landlords before, really, I say a lot of landlords who are fortunate enough will keep them under market value. But now with this new Renters' Rights Bill coming in, now they're worried that if the time came and they had to do that, then they might find themselves in a bit of a pickle. So they're doing that now, making sure that rents are market rate. The most important part is that the end of bidding wars when it comes to the rental market. Now, what does that mean? Now, currently, if a property evaluation for a rental property is £3,000, for example, but the landlord or the agent actually believes that they can achieve more than £3,000 ever so slightly, they won't go for 3,250. Most cases, if they're smart, they go for £3,000. Why? Because they know they can't undervalue a rental property in the current market. You cannot undervalue a rental property in the current market. So even if you put it for £3,000 and the property then has so much demand, has 20 people come through the door, 10 people making offers, part of those 10 people or more are going to make offers above that rental market price that you've put in. You're going to end up more than £3,000 anyway. So, it's a win-win for everyone. However, with this proposal of the end of bidding wars, a landlord can't do that anymore. So now if a landlord believes that the property is worth more than £3,000, potentially, can't be sure, but then if they put it for £3,000, with this new law, they won't be able to receive offers above that £3,000. They can only have offers or accept offers at that rental price or below. That is my understanding, okay, from the proposals. So what does that mean? As a landlord, logically, you don't want to feel you're leaving money on the table. You're not going to leave money on the table. So if you think that your property is worth anywhere between 3,000 to 3,250, or dare I say it more, are you going to put it for £3,000 this time around? No, you're going to put it for £3,500. And therefore, if you have to take offers below the £3,500, then fair enough. At least you're in control. Whereas if you put it at market price or what you believe to be market price and then you're wrong, there's no control whatsoever. You can't do anything about it. That's why I predict for rental price as we come into 2025, or as we move on through the months of 2025, before that as the Renters' Rights Bill comes into place, I believe that's what's going to happen. Now, if we look at this from an EPC point of view, same thing. If we look at data, and I'll share these articles with you guys a week or 2 weeks ago. Again, it's a fantastic video that we did on EPC. One of our most popular live is that EPC Explained proposals from Labour. If you haven't watched it, go back and watch it. It was very popular and a lot of great information there. Now, on this video, we did break down as to what landlords were thinking of doing to be able to mitigate this, to mitigate the EPC, the costs involved to get these EPCs up to date. And a lot of them did say they will be increasing their rental property prices. And that's why I believe as we get in closer to 2030, those rental prices are going to be higher than what the predictions that we've seen so far. That is my take on this anyway. So any opinions, I will welcome them. So talking about rental prices, I think it will be interesting looking at the most recent rental predictions or rental price, what's happened over the course of 2024 by home track. But again, if anyone does have any questions, please feel free to put them across. So this is home track rental prices. It looks at both 2024 and as we go into 2025. UK rental market, here you are. So UK rental market index. I guess this is going to be helpful whether you are someone looking to buy a home. I know that most people jumping onto this live will probably be a mixture of landlords, but mostly landlords and investors. But if you're on the rental market and want to sort of, figure out what's going to happen in the next year or two, you've got annual rental inflation for new lets UK 3.9%, increase in annual average rental costs since 2021, 3.2k. Demand for renting compared to pre-pandemic levels is 30%. So much more demand for rental properties now than sort of before 2020. So here's a summary of Home Track, and this was the most recent one. So what we've got here, rents are 3.9% higher over the last year, the lowest rate for 3 years. So when you hear that rents is slowing down, it's not coming down. There is a difference. Rental inflation ranges from a high of 10.5% in Northern Ireland to a low of 1.3% in London over the last 12 years. Now, the imbalance between supply and demand is narrowing, but will remain an ongoing characteristic of rental market over 2025. Affordability will be a growing constraint on rental inflation in areas with the highest rent. And the average annual UK rental cost has risen by £3,240 since 2021, a 27% increase compared to earnings growth of just 19%. Average UK rents are expected to rise by 4% in 2025, with large cities and London lagging while rents rise in more affordable areas. So rental demand falls from a high base as supply recovers off a low base. So you've got that rental, you've got 31%. What's this? 29% demand. So this is okay. This comparing 2023 with pre-pandemic. Interesting numbers. So the UK rental inflation hits a 3-year low. UK rentals have increased by 3.9%. I mean, we already had a glimpse of that, but this shows something even more interesting. So rent outpace earning growth and rent underperform earnings of 2016, 2019. This is an interesting graph. So what else do we have here? And then we talk about the cost, the rental inflation lower across all regions. What do we have here? Rental inflation slows across all areas except Northern Ireland. So if we look at that, we can see October 2023 in comparison to 2024. Look at London. Look how London, you can see the 2024, how small it is in comparison to that, comparison to 2023. And then you got the UK overall. Okay. So listen, guys, we've had the perspective of looking at the sales market. We've looked at the rental as well. We will be, as I said before, we're going to be joined by some property experts over the course of the next few weeks. Our live stream continues to be Wednesdays between 6:30 and 7:30. Today is an exception. Yesterday, of course, chilling out with the family and just making the most of the day. If you're not familiar with our structure, we do have our YouTube pre-recorded, being posted on Saturdays, and then we have the live on Wednesdays. I'm just going to check if we have any further questions here. There is one coming from talking about a strategic point of view from a landlord. And I'm going to share that here with you. And that is, should I focus on short-term rentals over traditional buy-to-let properties given regulatory pressures? I know that quite a few landlords have turned to short-term rental properties. It's not everyone's cup of tea. There is a video actually on that, probably released 3-4 weeks ago, where it compares long let with short-term rentals, and it certainly isn't for everyone. And it should be looked at in terms of, your resources and, of course, where your property is located, what region, whether it be parts of the UK or London. You do have to be very strategic, because if you're going to depend only based on tourists and nothing else, depending on where you are, then there is a risk attached to that. But it's also time consuming, very much time consuming. So I would say consider working with a property professional. If you want to look more insight on that, and what type of professionals you should be looking at and what kind of questions you should be asking, definitely go onto the link on the description and go onto those free resources as to what you should be asking and what you should be looking at. Because one thing I have seen over the course of the last few years is every Tom, Dick, and Harry saying they are serviced accommodation expert, selling courses, and taking on properties from landlords. And there are so many risks attached to that. So please, if you're going to do that, make sure you do it with someone who is established in the market. And established in the market doesn't mean someone who's been doing a service accommodation for a couple of years or 4 years since the pandemic. I mean established, with an estate agency or someone that specializes in that field for over 10 years, not someone who's just doing their odd videos and coming into the market and promising the world. Because I'll tell you, I've seen some disaster and heard some disaster stories. But again, service accommodation, these long-term rental, that is certainly something that has been asked many, many times. Feel free to go onto the link, book an appointment with myself, or just grab one of those free resources. But do watch that video from YouTube, which is a very interesting one, long-term rentals, these short-term. So we looked at quite a few things today. Sales. So we can expect sales, the capital growth in property in the UK to go up by more than 20%, even close to 30% in some regions of the UK. I hope this is helpful for a lot of you guys out there. Thank you for staying on. Hear me ramble on for almost an hour. Wishing you the very best for the new year, and I'll catch you all next week. Thank you very much.